Let's resume our discussion. We are going to start with the next standard or the last standard for today's coverage, AS17 segment reporting. Now, this is not a mandatory standard. This standard is applicable only for level 1 entities, which is mandatory only for level 1 entities or non-SMCs. Okay. So, it is mandatory only for these categories, whereas for the other categories, it is obligatory, which means it is optional. If they are wanting, they can follow, or if they are willing, they can follow. Now, in this standard, the terms that we need to remember is two: business segment, geographical segment. What is a business segment? In simple terms, a segment which is distinguishable as a separate business, which has its own risk and rewards when compared to the other business activities. So a business segment is a distinguishable component of an enterprise that is engaged in providing an individual or group of products or service that has risks and rewards different from other business segments. Okay. So the point is the business has to be different, and that particular business has to have separate risk and rewards apart from the other business activities of the entity. The other segment, geographical segment. This is again a segment where the distinguishing factor is not the business activity, the distinguishing factor is geographical location. It can be geographical location of the customer, okay, or geographical location of the business itself. Say for example, a business in India, a software business in India is providing services to customers in UK, Russia, India. Now UK may have different laws, Russia may have different laws. Though the operation is in the same place, the customer base is in different base. So it is also a geographical segment. So geographical segment is a distinguishable component of the enterprise that is engaged in providing an individual or group of products or service within a particular economic environment that has risks different from other operating environments. So the point that you have to remember is either business will be your distinguishing criteria or location of customers or business is the distinguishing criteria. Now what AS7 says? Identify what type of segments you can classify. Once you identify, we need to understand what are all the reporting segments or reportable segments of under AS17. So under AS17, we need to show certain segments separately. They are called as reportable segments. So a reportable segment is a business or geographical segment identified as above for complying with AS17 where information needs to be disclosed. Now, the choice is upon the entity to choose whether primarily it falls under business segment or geographical segment. How it will decide? Based on the risks and rewards of the enterprise. Based on the nature of operations of the enterprise, it can choose whether its primary reporting is business or geographical segment. Now, whichever segment you choose, the criteria is going to remain the same. What are the criteria? There are three criteria for this. 1. Revenue criteria, 2. Assets criteria, and 3. Results criteria. Number 1. Revenue. The revenue from the segment, external and internal inter-segment, which means revenue made outside the company and revenue made by selling inside the company across other segments, both put together is 10% or more, which means exactly even if it is 10%, we need to include. Is 10% or more of the total revenue of the enterprise. Rule number 2, segment assets. So assets that are acquired for that particular segment is 10% or more of the total assets. Third is the very important rule. Segment result in absolute numbers, which is profit or loss. We don't bother whether it is profit or loss. We only want the number in actuals. Is 10% or more of total profits or total losses. So if I have say 10 segments of a company where 7 are profit making, 3 are loss making. Add the 7 profits together, total profits. Add the 3 losses together, total losses. Whichever is in absolute terms, whichever is in higher value. Okay, so suppose if the 7 profits put together is 5 lakhs, 3 losses put together is 7 lakhs. 7 lakhs is the absolute number we need to take. So whichever is higher in absolute terms of the 10 percentage we need to consider. So segment result in absolute numbers is 10 percentage or more of total profit of all segments or total loss of all segments, whichever is higher in absolute terms. Okay. However, if under these 3 criteria, if you have identified the segments, but still the total turnover of the identified segments is less than 75% of the total enterprise turnover, then additional segments need to be added. Suppose there are 10 segments, of which 4 are falling under this criteria of 10%, 10% slab. Even in any of this one criteria, if they are following, they are going to come under reporting category. Either revenue or assets or result. இதில் எது satisfy ஆனாலுமே they will come under reportable category. Now, suppose only 4 segments are falling, but the total revenue of 4 segments is less than 75% of the total revenue of the company. Then you need to voluntarily include more segments into the reportable list so that the 75% turnover criteria is met. However, if total reportable segments identified above has turnover less than 75% of total turnover, additional segments shall be added as reportable segments. Okay. So we need to include additional segments. Why? The purpose is very simple. I need to ensure that total of reportable segments should be having at least 75% turnover of the total enterprise. The remaining segments are which are not reported. They are shown as the reconciling item. Okay, they are shown under the reconciling category in one column itself. Now friends, there are 2 types of reporting. One is called as the primary reporting, another is called as the secondary reporting. There is a format for primary reporting, okay, and the format is given below for your reference. And what is secondary reporting? Secondary reporting is just additional information given for the segments, right? So primary reporting, the format is going to be comprising of 4 items primarily. Revenue, which is turnover, result, which is profit or loss, assets, liabilities. So 4 items we are going to show for the reportable segments, and each reportable segment should be shown as a separate column. Okay, so segment revenue, external, inter-segment revenue. Now, your external value, you will have your external figures, inter-segment value. Now, I will have certain segments which are non-reportable, which has to be shown under the reconciliation, which says reconciliation turnover of non-reportable segments. And hence we will get the answer of total turnover, which will match with the revenue from operations of your profit and loss. So basically everywhere we should do a matching in this case, and you can remember this format. Okay. Second, segment result, profit and loss for each segment. Again, in the reconciliation we will show result, profit or loss for non-reportable segments, any other unallocated income and expenses, where certain items of income like interest received, dividend received, okay, these are all items which cannot be segregated into segments. Interest income cannot be shown under segment wise. Unless you are a financial company, we cannot show the interest or dividends etc. segment wise. So they should all come under unallocated income. Similarly, unallocated expenses like admin expenses, where I am not able to allocate between the segments. So under reconciliation for results, 3 items will come: result of non-reportable segments, undistributed or unallocated income, unallocated expenses. And the total result will be your total profit or loss, which will match with your profit or loss of the enterprise or PAT of the enterprise. AC. Right? Next, we go to the segment assets. Again, segment assets, we will have fixed assets and current assets. Fixed assets, any assets that are specific to the segment. Current assets are receivables and such items that are available in the segment. Stock, receivables pertaining to that segment. Again, reconciliation, unallocated assets like office assets, administrative assets. Okay. So all these office furniture, all these will come under reconciliation. Similarly, segment liabilities, long-term liabilities and current liabilities, and all unallocated liabilities will be shown under reconciliation. Okay. Now, major rule, so we had 2 types of segmentation, business and geographical. If primarily you are doing business segmentation, then secondary information, which means additional information, should be based on geographical segment and vice versa. Okay, so if primary reporting format is based on business segment, geographical breakup of turnover, assets and other information needs to be provided under secondary reporting format. The segment reporting format as such is vast, it is big, but we are only restricting to the level of questioning that will be asked in the exam. So we are restricting the format to such extent. Go through. This is about AS 17. Take a minute and run through and we will start with the questions. Okay. So let's start. Question number 1. Company A is engaged in the manufacture and sale of products which constitute 2 distinct business segments. The products of the company are sold in the domestic market only. The management information system, MIS, of the company is organized to reflect the operating information by 2 broad market segments, rural and urban. Besides the 2 segments, how should the company A identify the geographical segments? Can geographical segments exist within the same country? Explained within the lines of AS 17. So first question here is, based on the internal management information system or MIS that they follow, they have 2 segments, geographical segments, which is rural and urban segment. They want to know, can I further subclassify this segment? Is it necessary for me to further subclassify the segment? It is not necessary, because for management you are already reporting 2 segments. So we can use the same 2 segments as the basis for segmental reporting. Can geographical segments exist within the same country? Yes, because geographical segment is only based upon the economic environment where the business is operated, or based on the customer's economic environment. So let's see what the answer is all about. Question number. Yeah. As per AS 17, a single geographical segment does not include operations in economic environment with significantly different risk and returns. A geographical segment may be single country, a group of 2 or more countries, or a region within the country. This line, if you pick, okay, and significantly represent, then this will suffice. The other part of the standard, we can write it in our own language. You need not exactly replicate from the standard. Okay. Now I am coming to the last part of the conclusion, which is important. While the management information system provides segment information for rural and urban segments for the purpose of internal reporting, judgment is required whether these segments are subject to different risk and returns. If so, you should write, if they are subject to different risk and returns, the same two segments can be used for segmental reporting under AS 17. Okay, so this is the point that will drive your answer. Okay, so the point here we need to notice, can I use the same reporting format that I'm using for internal management? Yes, provided we have evaluated whether the risks and rewards are different. Second, can I have multiple segments within the same country? Yes, provided the risk and rewards are different for each of the operating environment. Yes, so this drives your answer for AS 17. Question number 1. Number 2, a company has an inter-segment transfer pricing policy of charging at cost less 10%. Market prices are generally 20% above cost. You are required to examine whether the policy is correct or not. So their internal policy is, yes, 10% below cost, but market policy is 20% above cost. Is it valid for them to have such inter-segment policies? AS 17 does not restrict. AS 17 only says whatever is the policy followed inter-segment, the segment policy needs to be separately disclosed. So we will say, as per AS 17, if the accounting policy is followed for each of the segments shall be disclosed separately in the financial statements. Okay. However, the AS does not mandate on the method or on the type of policy to be adopted. Therefore, the management is at the discretion to adopt the policy suitable for the company. Okay. So ultimately here, risk and rewards will define segments, but nothing else is going to be set under the standard. Only go by the segment, and inside the segment, whatever you are doing, we are going to report. Right? Clear with question number 2? Okay. AS 17 segment reporting requires that inter-segment transfers should be measured on the basis the enterprise actually used to price these transfer. The basis of pricing and the change should be disclosed in the financial statements. Here, the enterprise can have its own policy for inter-segment transfer. Hence, it can be based on cost or below or above the market price. All this is additional information. What is required here? If the policy is followed, then the same shall be applied consistently and disclosed in the financial statements. That is the only point that will be relevant for you from the answering perspective. Right? Question 10A. Practical question. Two types of practical questions from this standard. One, checking of the 10% criteria. And second, they can ask you to prepare a segment report format, abridged version of the format. A senior accountant of AMF Limited gives the following data regarding its 5 segments. So what are the 5 segments? PQ, RST and total. Segment assets are given, segment results are given, and segment revenue is given. Senior accountant is of the opinion that only P should be reported. Is he justified in his view? So here, what is the provision? We need to calculate if the segment assets are 10% or more, segment revenue is 10% or more, or segment result in absolute numbers is 10% or more of the total revenue. Total profits and total losses we need to calculate separately. Please calculate. So ideally for these questions, you can do a direct table. You can do a small table where it is easy for you to give the answer. So let us check here. Let's go one by one. Segment assets. So what is 10% of the segment assets? 16 lakhs. So if the segment asset is more than, if the total segment asset is more than 16 lakhs or exactly equal to 16 lakhs also, then it will fall under reporting category. P, is it falling under reporting category? Yes. Q,
Yes.
Yes. R,
Yes.
Yes. Yes. Yes. And T alone is not falling under segment assets criteria. So already PQR is already applicable. Now let's check for T. Okay, easier to check segment revenue, then come to segment results. Now segment revenue, if we check, total revenue is 900, 10% of which is 90. T is still falling below the criteria, so segment revenue also it is not applicable. Now let us check the segment results. When you check segment results, do not take the total, be careful. Total profits, 10 plus 10 plus 30. Okay, 10 plus 10 plus 30, total is 50. Whereas total losses is 190 plus 10, 200. So profits is 50, losses 200, whichever is higher, we are going to take 200 as the basis. 10% of 200 is 20, and whereas the segment result of T is 30. Doesn't matter whether it is profit or loss, number is only relevant for us. So 10% is 20, okay, and 10%, more than 10% T is having, so therefore T is also coming under the criteria of reportable segment. So here we need to answer for each criteria what are all the segments that are getting satisfied. Okay, so segment assets PQRS, segment revenue. For segment revenue, which one will get satisfied? Only P will get satisfied. Okay, whereas for segment results, P and T will get satisfied. So therefore, by going by the rule, we will have all the 5 segments as reportable segments. Okay. Here, because all the 5 is reportable, we need not check 75% criteria. Suppose if only 4 was satisfying, PQRS mattumda irukku, T satisfy alana, then we will check 75% of the turnover criteria. Okay, here 100% of the turnover is becoming reportable, therefore need not check the 75% criteria. Clear with the question, friends? Next, prepare a segmental report for publication in Diversifiers Limited from the following details. So we have forging shop division. Okay, then we have bright bar division and other domestic and export sales. And we have bright bar division, sales to fitting division and export sales. And fitting division, we have the export sales. So totally how many divisions here? We have one forging shop division. Second, we have a bar division. Third, we have a fitting division. And we have some probably common expenses or whatever it is. Now, they have given us the pre-tax operating result, which is nothing but the profit or loss before taxes. Okay. Head office cost allocated, interest cost, fixed assets, net current assets, and long-term liabilities are given. So you are going to present it under the segment reporting format. Right? So let us see how the segment reporting format needs to be presented. Okay. Particulars, 3 reporting divisions, forging shop, bright bar and fitting. And because we may have some inter-segment transfer, it is better to have inter-segment elimination as a separate line item. When this column will be useful is when you are doing the total reconciliation. For segmental reporting, it will not be useful. For reconciliation, it will be helpful. Okay, because remember, sales for one segment to another. If sales is in one segment, it is purchases for another segment. So naturally, when it comes to the company as a whole, it will get negated. And we have the total column. First, segment revenue. Under that, we have sales, domestic sales, export sales. Now, when we write this domestic sales and export sales, we are only going to write external values. Inter-segment values has to be reported separately. So, external sales 6225, 300 and 270. Inter-segment sales will be 4,575 and 45 as given in the question. 4,575 sales to bar division and sales to fitting division 45. So giving us a total revenue segment wise of 10,800, 345 and 270. Now of which if you see, the inter-segment sales total is 4,620, which will come in the inter-segment elimination column. And total of sales will be 6,795, which will be the actual turnover in the company, excluding inter-segment transfers. Similarly, segment result, they have directly given 240, 30 and negative loss of 12. Now, they have given us certain items like head office expenses and interest cost. Now, head office expense is a common expense. Can I allocate them to the segment? No, I cannot allocate them to the segment. So, I need to show them only at the consolidation level or reconciliation level. So, head office expenses, reconciliation level. Interest expenses, reconciliation level, which gives us the profit before tax as 98. So, here only major point is interest and head office expenses will be shown in the consolidation column and not in the segments column, even if allocation is available. Allocation irundhalum prachana illa, they are all common expenses which should be shown in the consolidation column. Next, we have the fixed assets. Same way, fixed assets, they have given us 360 and 180. Okay, so 360, 180, which is total 540. Current assets 180, 60, 135, which is total 375. Unallocated assets shall be shown separately in the consolidated column. Don't take it in the segment column itself. Unallocated assets shall be shown in the consolidated column, which is 75 plus 72, 147. So total assets is 1062. Same way, segment liabilities, long-term liabilities, 30, 15, 180 and add unallocated liabilities 57, which gives you total liabilities of 282. Okay. This is primary reporting format. Now, what is this segment? Is it business segment or geographical segment? Division. So, business segment. So, now, because this is business segment, we are going to show secondary reporting format of geographical segment. How to show geographical segment here? Okay. We have domestic sales, export sales. So, only two geographical segments, domestic, export. So, we will write for each division, we will show domestic and export separately. Okay. So, export sales, export to Maldives consolidated. So, all these values are going to be shown separately. Okay. Now, remember what all will come in the consolidated column? Okay, let's go in the order. Inter-segment revenue will come in the inter-segment elimination column. Consolidated expenses like common expenses like interest, finance costs, okay, or head office expenses will come in the consolidation column. Common assets, head office assets will come in the consolidation column. Head office liabilities will come in the consolidation column. So one item in the inter-segment elimination and balance all head office items in the consolidation column, right? So this is your primary and secondary reporting. So the first table is your primary reporting. Second table is your secondary reporting format. So far not frequently tested as reporting format, but if asked, this is what is your format all about. Right? Any doubts in AS17? Okay, the rule is very simple. We only have 3 threshold limits to remember for AS17 and 1 criteria, which is 75% turnover criteria. That's all. Okay, so okay, someone is asking additional segment criteria, please repeat. Okay, when you do not have enough segments to be reported, so what will happen? Suppose if I have 10 segments, out of which 4 is only reported, and for the 4 segments, if the total turnover is say less than 75% of the enterprise turnover of all the segments put together, assume total enterprise turnover is 100. For this 4 segments together, I am only getting 50 as the turnover, which means for the balance 25, to make it to 75%, for the balance 25 turnover, I need to add more segments voluntarily, even if it does not meet the 10% threshold criteria. Which segments you can add voluntarily, the choice is yours. Okay, the management's choice for it to add. Okay, so this summarizes AS17 segment reporting. Possible questions: whether a segment is a reportable segment or not, whether a business segment, how to consider business segment and geographical segment, and 10% criteria and 75% criteria they can ask, or last thing that they may ask you is a format of reporting. Right, so with this we summarize our chapter AS17 and 6 standards we have completed for today, and we will close our session for today here. Tomorrow's class we are going to start at 7 a.m. like we told, like we just discussed, we will start at 7 a.m. Okay, and we will first be doing accounting standards while we are fresh, after which we will be discussing the other concepts, ESOP, buyback, and banking, non-banking. Okay, we might have a small change in the order in between if suppose a change is warranted, probably some standard in between another topic, and then we can come back till we complete. Okay, let's target till 5 p.m. So 7 a.m. till 5 p.m. It will be here. Okay, so it will be 7 a.m. to 5 p.m. So till this we will be covering tomorrow's agenda. I think I have already given. In today's agenda, we are left with ESOP and buyback, which will also be covered as a part of tomorrow's class. Okay?
How 8 to 6 would work?
8 to 6? Yeah, fine. Well and good. 1 hour delay. Okay. So, near Virpam, we will go at 8 to 6. We will start at 8 and go until 6. 8 o'clock in the morning. Okay? See, 7 or 8 is fine. Just that I want an early start and I want an extension so that we can complete the syllabus on time. Let's not extend it to a different date. Right? So have a great evening. Take rest, enjoy, and be back with all vibrance for tomorrow's class. Have a great evening, friends. All the best.